Good afternoon, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on a Saturday afternoon. I'm a little bit late. I'll try to keep it short and brief. You can find me at Solstice ATR on Twitter under the handle Chrissy Farah, on Instagram as well as Discord, and you can DM me. My ID is ZOU pound 9345. Remember, we use adaptive algorithm for our trading. It doesn't matter what the instruments are. You can hit the subscribe button if you do like it, and you can follow us on YouTube for free for the weekly video. This is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. Use at your own risk, and if you need to copy the material, please request information and check our website under Solstice for the disclosure information. Before I start, these are some of the things I want you to be aware of. How many signals have the bears made in the stock market lately? We have to monitor and assess the probability of the different instruments for the coming week. Some of them can be the electronically traded funds. Some are in the futures and commodities, as well as, currencies, as well as the fear gauge, and the bond market, as well as crypto. We have to have an open mind to all the possibilities, a plan for each entry and exit without any biased opinion to either side, and we're going to trade what the charts offer to us. That's the futures. That's the currencies. This is some of the ETFs. This is some of the stocks. That's the short-term and mid-term bonds, as well as the crypto. Let's start by taking a look at every one sector. And this was last week's video that I put these sectors, take a snapshot of it. For the tech sector, the S&P, the NASDAQ, the growth accounts and value. And this is the defensive stuff as well as the small cap. Let's start. I have the combination of the three instruments: the S&P, NASDAQ, and the Dow. As we can see, this week's candle was basically not much movement in it. We had a reset and we stayed consolidated inside the prior week's range. If things are going to change, we have to have an open mind on direction and keep an eye on the NASDAQ 100. I'm going to start with the NASDAQ 100 and work my way back to the small cap. Let's take this out. We can look at either the NDX, which is the NASDAQ 100. As you can see, this is the weekly. Or we can use the /NQ, which is the E-mini contract for the NASDAQ, or the QQQ. Okay? Let's take a look at this on a daily chart. Time frame, we're going to go daily instead of 5 years. We're going to go to a shorter time frame, which is around 6 months. Instead of weekly, we're going to go to a daily, and we start from there. As we can see, since the February and the March low, we continued higher, and we eventually reset a little bit in May, and we continued higher. We had a little glitch last couple of days ago in the NASDAQ, and we fell back a little bit lower. Then we had inside day for 3 days. We looked down on Friday, and we bounced back. This is the monthly Fib from high to low. And we have this gap from here, from the prior month when we consolidated up. We retested partial gap, and we continued. So what I'm going to do is go to a 45-day, 4-hour chart to show you where the gap is. This was the consolidation before the breakout. And this was the close of the prior week. And we still have this gap going, continuing higher. On the monthly chart for July, we know this is our low. This is our high. This was the Monday range. Then we eventually, on Tuesday, we fell back down. We recovered part of the move back up on Wednesday. Thursday, we looked up, couldn't finish the prior highs. These are considered triple tops or double tops up here. And we could not finish, and we fell below the Wednesday's range, and we fell back down on Thursday. On Friday, because we were extended to the downside on a gap down, we came back to refill the Thursday's gap and halfway back in. We are inside range. We have to keep an open mind on the 61.8 fib from the high and low of this week in order to make sure we stay intact. If we fall below the 38, and eventually this area will look for the backside of the consolidation in the prior month range in the NASDAQ 100 if there is change in trend. Let's take a look at now YM, the Dow Jones Industrial Average. As we can see, we've been range bound 1, 2, 3, 4, 5, 6 days before the breakout coming up to here. We had an annual high, we double topped here, and we fell back in range. Have an open mind for the 38% to hold us in. If it doesn't, you look for the 50 and 61 back down from the breakout from 2 weeks ago on this bar. So if we go to the daily time frame, we go daily instead of annually, we go 6 month, 9 month, and we push OK. We can see that the range from the January low continued. This was the March low. We continued higher. We've been range bound since May in the Dow Jones Industrial Average. So pay attention to what the charts offer you before being biased to either side. We are away from the 50 simple moving average on the daily. Let's take a look at now the ES before the RTY. We do the S&P 500 or the SPX or the SPY, which is the ETF. We know this was the February low. This is the March low. And we continued higher. We had a small reset in May. We grinded higher. This is a small gap in the daily charts from the overnight action. We have continued higher, but we've been consolidating in the last 5 days range after the Tuesday reset. Did we hold the 18 SMA or did we hold the 38.2? This is the 50 and that's the 61 on the monthly Fibonacci. I know the computer grabbed the high and low of the prior months on 6/18 on the daily chart. Let's take a look at it on a 45-day range, 4-hour chart. We can see that the monthly high and low where it is in relationship to the consolidation in the last 5 days. Do we end up holding the 43.65 or do we fall below the 38.2 fib extension, which is the 43.56? My line is in the sand is about 72 to 68. If we end up losing it, I'll look for the backside of the 61.8, and that would be the 4-hour chart high and low. And this is the first area I would look into for a small bounce in case we head south. If we stay intact inside this range or we end up breaking higher, that's okay if we get the support from the overall market. Let's take a look at the RTY, which is the small cap, and we'll do the 4-hour. We can see that the monthly high and low, we have not been able to stay above the 38.2. We looked up on Friday, then we fell back in relationship to the NASDAQ 100. The Russell has recovered a little bit, consolidated in the last 2 weeks range. In order for the Russell to continue, it has to break the 200 SMA on the 4-hour and this area to continue higher. If there's pressure, we look for the backside of the small fib and eventually the backside of the breakout here. Let's go to the daily. We're going to go time frame daily instead of 1 year. We're going to go 9 month, and the 9-month bar, we're going to look at it from the range from the January area where we had the annual high December. This is a January low. We have been range bound in the last 6-7 months in the Russell. So have an open mind in case the Russell does decide not to take the market down, because we're still in a downslope. We tried to break up, but we consolidated in the Thursday's range inside to the down. Do we hold the 50 and the 61 to continue higher, or do we end up losing the 61.8 and the 50 simple moving average? And that would be the weekly range on the Russell, because the Russell weekly range is this one, have to be moved. I have to activate it because I didn't move it. And we have to shift it to the weekly high where it was here, the high for the week. Let's take a look at now GC, which is gold. We can see GC has been trying to go up. It reset a little bit, bounced off, but on Friday it sold off. This is the weekly bar. In order for gold to continue higher, we do not want to lose the 1805 area, 1806. We'd like to consolidate in this area or to continue high and don't lose this channel in order to continue higher and break out. If we end up breaking above the 50 SMA in the 1835, we look for the extension to the backside of the down channel from long time ago, which is the 1880, in the direction of the move to the upside. If we fall through this channel, you look for the backside of the 1775. Let's take a look at crude oil, CL. Crude oil has been doing very well. This is the monthly high and low. We retraced part of the move back up. We consolidated for a couple of days. So we're making a decision on this down channel. Eventually, we broke up. In order to continue higher, we have to hold the backside of this minor channel that we fell from here to consolidate and hold that 50 SMA in the 18 in order to break up the 75.50 in order to get back to 76, continue higher. If we fall through this area, you keep an eye on the 68.90 area to see if it is the consolidation for another leg up, because it can create a shoulder to continue higher on the daily chart. If I go to a 45-day, 45-minute, you can see that there was a nice consolidation here and a grind higher. It does not mean that it is weak or strong, but if they do take over this candle here in this one, we can see higher lows. And if we fall back in the range, keep an eye on the 68.90 area to hold us, 68.90 to continue back up, or we fall back in. Let's take a look at now BTC. That's Bitcoin. We can see on the 4-hour Bitcoin has really recovered from the prior week that we have this professional gap. I did not mark it. Let's do this together. We're going to put a gap. We're going to fill this area here to this area here where the close was. On Bitcoin, we're going to extend it to the right, edit property. We're going to extend it for a couple of days like this so we can have the gap. We're going to go get a text, the letter T, and right up here in capital, gap. And it'll mark where the gap is for us to reference. If we're going to continue higher, we'd like to see Bitcoin never fill that gap or never lose the 37.90 in order to continue higher. We have a nice push up after the close on Friday, after the 800-point drop. It U-turned and continued higher. We have in the future a higher target. We do still have that lower target, which is this is the high and low of the ADX DMI. It's going to be too much information, but what I'm trying to say, we got overextended. It needs a relief in order to continue higher. Or if it falls and we lose that 37,000, it's a mental number, and the 35,600, it can set us back to the prior low before continuation. So have an open mind on either side. Let's go from the time frame, go to the daily. We're going to go, instead of a yearly, we're going to go 9 month, and we're going to look at it on a daily chart. We know this is the trend that we were in a down major trend. You can see it. We came to retest this area in order to continue higher. Your targets would be the 23, the 38, and the 61.8, where they would fill this gap. If it does not make it to this area and we reverse back, we look for the 35 and the 34,000 to hold us up to continue back higher in case it does fill the gap from the low. Let's take a look at Ethereum, ETH. And Ethereum is in a similar situation on the daily. It's trying to break out of this channel. You can see it. It popped a little bit. Its head above. We had a double bottom here. Does this mean it's got a W shape and a small cup and handle in this move to continue higher? Let's take a look at it on a 45-day, 4-hour chart. You can see this was a rounded bottom. This is the professional gap. We can see that. We can put we can write here gap if you like, everyone. We write GAP. So we can have it as a reference. And we can mark it with a box, similar situation to the prior candle. Oops. There it is. Because it retested partially this area. So we can have an open mind where the gap is. So let's now take a look at the VIX. The VX is very important. If the fear gauge has been consolidating in the last 2 weeks, and if things are going to turn south, the VIX will get a spike up into the market instead of the consolidation between the 2010, between the, let's say 1950 and the 2150. In case we do break the 22, we look for the market to reset. And if the VIX fall below the 1950, we'll look for the market to continue higher. And what I would do in here, I'm going to go to a 3-year weekly to show you how it looks like, or you can use the VIX. Instead, we're going to go 3-year, and we're going to go weekly, everyone, okay? So we can see the spikes up and the spikes down. We looked up, this is the COVID situation. We fell down. We reset higher, fell down, reset higher, fell down, reset higher, fell down, reset higher, fell down. Does this mean it's getting a rounded bottom? Because we almost filled this gap. We never fell down to the $11, but we stayed in the $16 range. Does this mean it's going to spike back up to the $25, $27 area? It is possible if things do change and they head out south. So if I go to the daily, we're going to do an annual chart time. Going to go daily. We're going to go 1 year. And we're going to push instead of weekly, a day. And we can see that there may be a possibility of a change in trend in case we consolidate here too long and we move back up. So let's take a look at the dollar sign DXY, or you can use the AUD JPY for references as well. We can see on the daily that the DX came back from that rounded cup, and this is the handle of it. It looked up, missed the double top, and it fell back down in the range on the month. Does this mean it holds the 50 SMA to continue higher, or do we end up reverting back from the mean low, going back up? It is in compression. We lost the RSI on the daily chart, but what we want to pay attention to is this steep channel here. Does this mean it's getting a rounded bottom? And are we going to clear this consolidation here and these candles here in order to continue above the 92.45 in order to keep going back up to the 61.8? So keep an eye if the dollar gets strong next to the AUD/USD, I believe. This is the Aussie to American. I'm just kind of showing you because it has relationship to mining, agriculture, drilling. So the Aussie dollar shows it. And if you look at the JPY to the USD JPY, I believe, USD/JPY, you can see that there is a change in the trend. Keep an eye on it. We're going to do one more, the ZN, which is the 10-year notes, before I go to the ETFs and some equities. We can see that the 10-year notes has been range bound in the last week and a half. We had a move up and we came back in. On the 45-day range, we have to keep an eye on the interest rates to see if interest rates in the Federal Reserve Board keep it low. That means the bond market, the par value is going to increase slightly, bit by bit, to keep interest rate, to keep the economy going, because we have to pay attention to what the cases are in COVID-19 internationally and domestically here to see what the outcome is. And we can see here on the bond, I still had the fib from last month. So this is no longer valid. We're going to remove it. This is the weekly fib, which is no longer there. We have to move the weekly fib to here, and the monthly from June 1st, we got to make a new fib for the month. So what I'm going to do is anchor this one together. We know this is the 7-1 range to the high here, and we have to keep an eye on the 38%, the 50, and the 61 to hold in order to continue higher. If we fall and get a rebound at the 50 or 38, that would be good for the bond market to stay intact. And I'm going to change the properties to, and I'm going to go select. We're going to go purple because I used the monthly for the purple in purple. For the yearly, I'll use the colors, and for the weekly. So that's the ZN. Let's take a look at some ETFs. We're going to start with the IEF since we are on the bond sector. And this shows the same, similar situation. We can look at, gonna go to, instead of the 4-hour chart, we're going to go daily. We're going to go 9 month. We'll stay on the daily on all the other instruments, okay? We can see that this is the gap that we filled. We still have not filled this prior gap. If this is a rounded bottom on the IEF and we're going to get a breakout, I look for this handle to continue and eventually get to the prior target and fill this gap here, which was the gap down. We tried to retest it, couldn't fill 100% of it, and we lost it. So is this going to continue or not? So let's take a look at now TLT. I'm started with the bond. This is the longer term, similar situation. You can see that the gap is here. We didn't test that area. We're still in the lower area on the long-term 20-year notes. We're going to look at small cap IWM. You can see the IWM has been range bound since January of this year. Has not moved. Let's see what the small cap can do in order to keep us going. Let's take a look at JNK. And this is a Trust Bloomberg, basically an overall ETF for the overall markets. We can see it is continuing to consolidate, and it tried to break up, but Thursday was a down day. Friday was an inside day of the Thursday's range. Let's take a look at XLK. You can see the XLK, that's the technology sector trust for the ETF fund, which you can see it is continuation, but fell back in the range. Does this mean that the NASDAQ is getting weaker? There's sector rotation because Amazon reported it was a little bit weak, and it kind of gave us a reset in it. And you can look at the VGT. That's the Vanguard Tech sector. And you can see it's a similar situation. So I'm kind of giving a little bit different sectors. We can look at the SCHG. That's the growth fund from Schwab. We can see it fell back in the last, Monday was the high. Then you had the Tuesday, Wednesday, Thursday, and Friday on a gap down holding the 50 simple moving average. So we're going to keep an eye on that. We can take a look at the NYA. And once again, you can see where we are in relationship to where the sector is in the composite index for the New York Stock, because this is a more majority of the overall NASDAQ. The New York Stock Exchange equities that are traded on the exchange, instead of like the, if I put like the XLV, that's the healthcare sector, XLV. It's more of a concentrated, or the QQQ, which is part of the ETF for the NASDAQ 100. You can see that the healthcare sector is still continuing. This is the NASDAQ 100. We can see that it is a little bit different. I'm going to do two more. I'm going to do the SPY, and I'll do two more others, and that's the S&P 500. I have this is the monthly fib for May, for June. So we have to remove that one and do the one for the July. So we know this is the low and this is the high for the year. So for the year and the month of July. So we're going to edit the property. We're going to go to the first of the month. You can see what I'm doing. So that way you can do it on your own at home. We can change the color to purple. And this would be our monthly fib for the coming month in the SPY. So I anchored that one for you guys. I don't do all of them, but at least I'm giving you some ideas how to do this stuff. And let's take a look at VUG. That's the growth from Vanguard. As you can see, similar situation. We looked up, came back in. We're retesting the 18 simple moving average. Does this mean we'll lose the channel in order to get to the 50 SMA and the 38.2 before they make a decision, or do we revert back going higher? So I'm not being biased to either side. I want you to be careful what you are trading and understand the technical. So let's go last to the S&P 500 one more time, and let's take a look at the profile on the S&P. We're going to go to style. We're going to go from standard. We're going to look at the monkey bars, and here they can show you what are they on. They are on 3-month daily. So we're going to go Instead of daily, we're going to go to time frame. Instead of daily, we're going to go intraday. We're going to go 15 days, and we would do either 30-minute bars would be sufficient enough to see what the overall market on the S&P has been doing. As we can see in this area, I'm going to minimize this a little bit more. We can see on the weekly, the last 5 days, we've looked up, created a higher POC, fell back in, created time spent higher. We fell inside the range, then we went higher, then we fell back inside the range. That means we are in consolidation for the last week in this range. If we end up losing that 43.68 area, or 43, this low here, 43.6475, it may open the door because there is a virgin control point down here at this 43.55. And what I'm going to do is zoom to the left so you can see the levels where we're coming from. So we have a virgin control point that we never visited. This was an inside day which was retested. This was an inside day being retested. And the second virgin control point from this area here, which is around the 43.55 area, we have another one down here at 42.40 in case the market tends to go south, because we looked up, we fell in, we recovered part of those volume profile. So we have this area here, and we have this area here. So in case I want to go back from monkey bars to the standard charts, monkey bars, we're going to go back to standard. What I'm going to do is go to the 45-day 4-hour chart to show you the consolidation and the breakout. So we know we are in this range, consolidating in the last 5-6 days. So when we looked up, we continued higher. Remember, we have a virgin control point here. This one was retested, and this one in here was retested from the prior day. The only one that didn't get retested is this push higher, because we never looked back into it, and with our virgin control point is in this area. So we have to keep an open mind on this breakout in case we retest the 38, the 50, the 61.8. Do we hold the channel to continue higher, or do we fall? I hope this was helpful, and I hope you enjoyed this video. If you like it, give me thumbs up, and I see you around. Take care.